Good morning, all. Welcome to today's week update. I first did the video which I had to take down because there are other things I had to take into consideration while we are trying to look at the direction of trades and what is possible. It's important, to look at history and see what may happen or not, because the US presidential election is around the corner. Are we going to see a bullish dollar? Are we going to see a bearish dollar? So it's very important that we put this at the back of our mind in order to trade correctly. Now, in this format that started from 2008 here, around May till date, have we had US elections, along these structures, which I believe that we've had like 4 at least. And this is going to be the 5th US presidential election. So we're going to look at the history for us to navigate that next week, what is likely going to happen to the dollar. And that was why I had to take it down, even though we know what the structure is doing. And so we're going to look at the structure and, the US election history. The history and the reaction of price in terms of structure is what we're going to focus on to be able to determine the would-be or the most likely things or scenario that will play out. So we need to see this. Now, looking at this structure in itself, that explained this structure many times, that here we saw a wave 1 here. In this regard, a wave 1 completed itself here. We have A, B, C of wave 2. So wave 2 ended here. So what in this structure, we're going to look at what the US election did if we are able to catch one. Then we now saw that this is wave 2 in itself. The first wave here, 1 of 2, 2 of 2 in the primary, and we began to grow more into 2. We finish with 3 of 3 here, A, B, C of wave 4 of 4, and wave 5 finished here, 5 of 3. So for us, if we're trying to understand what structure is all about, we must understand that we have finished the whole of. Now, we will see this build up many times, and we have to understand that when you have third wave, the fourth wave in the primary must build itself, 1, 2, 3, then this a C. To understand, we have an A, B, C here, then to finish with 5 of 3. So wave 3 is gone. Then the fourth wave major, we had A, B, C of the fourth wave major, and wave 4 major is gone, and we finish with 5. So we can see that we've had 1, 2, 3, 4, and 5. And what can this be? This can only be probably most likely an ABC of this whole move. To correct this whole move, ABC, A, B, and a C. So the extent of this B wave, it's what we feel that B wave is not completed. This move may complete B wave, and we have a sharp toss to the downside to complete a C wave. And if the C wave is going to lead to something else, we will know. But now, let's look at what history we've gotten from the US presidential election. Let me bring out the drawing. Now, this map the US presidential election history, where in the making of the structure did we have US presidential election. Now, a day or the day of the election or the second day of the election, we're going to look at what price had done a day before the election. Election day usually is a break. and day after election, what were the kind of, effect that that election has? Was it bearish or was it bullish? So, and again, structure also matters. So I'm going to go into day because day will help us better to capture the moment better than just weekly structure. So let's look at the day. And I'm going to expand. This is the first. We're going to start from 2008. This is the second here. This is the third. And the last one is pretty much here. Good. This is the last one here. So I'm going to zoom in. Now, zooming in here, this is the day preceding the election day. So the price had been corrective. The price had been corrective here in an attempt to finish. Okay, let's look at it again. This is the beginning of the move here. So this is from A1, A, B, C, up. So we had this complex structure to finish with 1 and with 2 here. Then we went up to have a 1-2 situation whereby wave 3 is extended. Then we have wave 3 finishing itself here, then trying to do a wave 4 and a wave 5. So in between that wave 4 and the wave 5, what we first saw is the price was correcting to the downside, but that was the day before election. Election day is to finish immediately. That was the day. Okay, election date was on the 4th. So we can see on the 4th, the price, the second day of the election, the price went bullish. So we can see a bullish move, to break the top. That was what we saw. The bullish move to break the top here before, immediately after the election, the price started coming down, went bearish. So it's a fall after the election. So the day of election, we saw that reaction, even though it was initially bearish to complete that structure, it went bullish for the last time before a big correction. So probably like this is if it's a daily, this should be like 1, 2, 3, 4, 5, 1, 2, 3, about 3 weeks. Then it began to come to the downside. So that is what to give us a wave 2. That was what we noticed here. I have to go back to it. Now to give us a wave 2, it was even within this wave 1, then a 4, and to finish with 1 here. So, so that was what happened. So a 4 after the election, a sharp rise to break the top, a fall after the election, then the price resumed the correction contour here, A, B, C of a wave 2. And this is more like a regular flat here. So we can see that this is A, this is B, and probably at about 90, and this came down probably as a regular flat here. Then we've started the inside of wave 3 proper. So inside of wave 3 proper, we can see that the price had gone up, to do a 1, a 2, then extension of wave 3, which is a 3-1 here, and the price was falling, here. The price was falling here. So what did we see in terms of the structure on the election date here? So on the election day here, what we noticed, the election date here was always Tuesday, 6th. The price was within this correction, and you would have thought that, yes, it will continue to go down. So after the election, the price came down with a sharp and a reversal. So the second election year here, which is 2012, we can see that the price didn't go bearish for long. It went for almost a week or more, bullish again before we saw a completion of this particular structure as in wave 2 of 3. So we had noticed a bullish reaction immediately after the election. Then after the election, price will now resume bearish. That is what we had noticed based on the structure. So let's continue. The third election year. Yeah, let's look at that. The third election, where did it, was it? Okay, we didn't, with 1 here, we didn't, with 3, internal with 3 here. Then the third one occurred, okay, this is just, wave 3 had not even ended. That wave 3 was long before the third one occurred. Yeah, wave 3 had not ended before the third one occurred. So now, wave 3 had given us like an A, sorry, the end of 3, we're having like 4th wave of wave 3, which is an A, B, C. So A, B, C, we're supposed to continue to finish with 5. So it occurred within wave 5 of 3. Now, what did they do within wave 5 of 3? So we've had a 1, 2, sorry, a 1 A, B, C. Then the inside of wave 3 itself, we went up trying to now correct. Always bearish, most likely trying to be bearish. The preceding the election, so I noticed a pattern that it would probably be correcting like a bearish move. So everybody will think that the price is going to go bearish. And you can see immediately the next day, there was a spike reversal, a bullish move. Then after that bullish move, the price will complete its structure. So it's always happening within the structure that has not been completed. And so the move is first bearish, then you now see a spike reversal. So that is what we had noticed even the third time now. So we didn't to finish up with 3 major, and before we begin to have with 4. So the fourth election now, let's look at it within this structure. So with 1, with sorry, the second election, the third election. So the fourth election here occurs within a major big with 4. So in a major wave 4, we are seeing A, B, C. So A, B, C. So it was within the C leg of that wave 4, which is bearish. So let's see what happened here. The fourth election, preceding that fourth election, it was bearish, which is the third, on the 3rd. The election was actually on the 3rd, so it was going bearish, and they pushed it back the second day to break the top. But it was meant to be bearish. So the reaction of the election, we had noticed something that it will look bearish, and the next day of the election or thereabouts is going to go bullish to cause mayhem, and the price will now resume its normal course. That is what we had noticed. 4 elections in a row, the same pattern, price correcting as if it's going bearish, and they will return it bullish. So the lesson that we can gather from here is, number 1, where is the structure? That's the lesson we can gather from here now. Where is the structure? Now, with the structure, if it's correcting, we should know that, oh, it's correcting, then they are going to go up to complete this structure because it's going to be bullish the day after the election. It's going to be bullish the day after the election. Now, where will the structure be completed the day after the election for the price to resume bearish? So in the end, for how long will it continue being bullish according to the structure before we go bearish? So because it will always go bearish thereafter. Now, let's now look at where we are. We are here and we are going to have election around this area. If we are going to have election around this area, if Sunday candle opens, I want us to pay attention to some things. If Sunday candle opens the way it is, we are going to have like 2 candles. This will complete Sunday candle. We're going to have Monday and Tuesday election candle. And the third day, which will be Wednesday, will be the day after election. Now, the attention we're going to put here, for me, I would think that if this candle closes in a pin bar, you can look at the base of this candle. If it closes on a pin bar and close with a structure of a pin bar, now it's going to probably close like something like this, You can see the wick here is very small, the tail here is small, but the tail here is relatively longer. And with this one, we'll just close up like this. If it closes like that, then it's giving us a bullish interpretation after the election. So what I would now expect is the price is going to correct after this one closes for Monday and Tuesday. Price may correct to test this area. Price may correct, test this area. You can go and backtest this after the election. So to correct around this area, if price corrects around that area, this is the area that the price will not break for now. So price is not coming down in the immediate. And that is what I'm saying now. I'm saying that if this closes like this on Sunday, the price is not going to continue to go up. The price will come to the downside to correct. So the extent of correction, then you can look at where at least to test this support base, if not slightly below. I believe this range is where the price will be, correcting Monday and the day of election, and thereafter there's going to be a sharp reaction to the upside to take people out. So so what I'm predicting, it's a bullish move, because that is what it always is. So Monday, Tuesday, a bearish move. You think price is going down, price is going to go bullish. Now, what can we expect in terms of bullishness, and for how long? Now, I have a little headache. The little headache I'm going to give us is this. Let's look at this on the larger time frame now. Let me zoom. Now, we had seen that this is where the price turned. The low, the uttermost low is here. And we are entertaining that we had an extended flat around this area. And that extended flat, what did it give us? In terms from here to here, let's look at it. From this A, and this is B wave to the downside. We look at that, and we said the extended flat stalled at 1, 2, 3. So extension to the upside. This is an extended flat, and we said this base is what is Y, is W. Now, these now could now be an X, then A, B, C of a Y leg. That is one scenario. A, B, C of a Y leg. And if we had expected that, we'd expect that these would at least be in the vicinity of a zigzag to the upside or a regular flat to the upside to finish off this. And this is where my headache is. This is where my headache is. So we must be ready for anything. So looking at the correction to the downside from this top, from this base, the origin of the Y to the end of the Y structure in the green up there, these for me had broken 88 and 90. So 90 is breached. So that kind of worries me that it might be in for a road shock, because ordinarily, if it's going to play like that, like a WXY, well, that would expect that these will at least give us an 100 for a 90, 100 extension, and probably will be seeing reaction to the downside around 108. So the first thing is that, can price go up to 108? These are questions that we need to answer. Can price go up to 108 from here over time? Maybe not the same day, probably over like the next, because if it's how many weeks does this one take? We're going to look at it later. So for the price to get here, maybe this one took like about 2-3 weeks. So in the next 2-3 weeks, would the price continue to come to get to this point? That's the first thing. And would it get here? Coming to this point, it's like we are seeing that this is the last place that price can come to 110. And price will not do more than that, even if it's going to go up. But now, maybe this broker, which is ICOS, I'm going to later look at other brokers and try to decide what or determine what price may do. But what we should be expecting now is this, that this is going to be bullish. If it's going to be bullish, then probably we will see this breaking this top, because now it looks more like it's going to break this top. You know, the first top that I see the price is going to make nonsense of, because it's an election year. These, I don't see this holding this price again. I don't see this daily resistance holding this price, but I see this happening. So if the price corrects here, good. But if we have a sharp reaction from here, then it's going to end here. But if we have a breach here, if we have a break above here and price begins to correct above here, this is not going to hold the price. The price is coming here. So that's how to align ourselves. The first place is that I don't see price, this holding the price. This is what may hold the price the last. Here, 105, 200. So if 105, 200 hold the price and we see a sharp move to the downside, then that will have a good place to sell. So a sharp move, wait for a pullback to begin to sell. And if we sell, we might sell down, and this may be off the mark. So in that regard, because this one had breached 88.90 to the downside, that is why I'm thinking that way, that we may now see a situation whereby we have this flat in the middle. We may have this flat in the middle, formation in the middle, and that is what probably we may now get to complete this structure here. So we may now get this around this area to complete this structure as an A, B, and a C, and the price will begin to fall from here. So that, if that is the case, so it may mean that the structure had been completed here, and this is just the first move of 5 waves, and this is just an A, B, and a C, because this also rightfully will be for a C, an A, B, C for a further 4, and we are going to wave 3. That is possible. But if the price should breach this area now, then this is the next place we are going to do. This one will not hold the price. This is where we are going to. So, and a breach here, technically, the price will get to this point. So we're going to look at the 2 areas we should be expecting sharp reaction to tell if this is what we are going to get. But let me just tell you, it's going to be bullish after the election. So this one is not going to hold the price. This is the first place. A break, and if you don't see a sharp reaction here to the downside, then this cannot hold the price. This also cannot hold the price. So the price 105,200 is the first, and the next place is 108 here. So if the price also corrects and break, and we don't see any sharp reaction, so before you say you are going to sell the dollar weakness, look for sharp reactions first here and secondly here. So if I were you, what I will be doing is to try to buy the dollar, because the dollar is showing some strength now. So if I buy the dollar, I don't expect price to come and take this. So this will be my low for now. And as the price is going up, I'll be looking at structures to do what? To decide. After the election is when probably I will not be shifting my stop loss. That is what I would do, with the aim that with this stall here, if I get sharp reaction, I've shifted my stop loss, let it hit me, then I will look for a sell setup. And if we're going to get a reaction, see, that reaction is going to break the structure that it has created on the 4-hour to the downside. It will break that, and it will even break this one. So once you have a break here, then you know when you have a break of 103,700 to the downside, then what immediately we open, don't begin to buy from here, allow it to sell. Now, with that said, and what we are going to do on the euro dollar now, once we open, what we are going to do on euro dollar is this. With that history of US dollar election, we'll see this as the top place that the price will not break. That is what is going to happen. So this is the area. Then we are going to allow a retest to sell further. This is a bearish move. It's going to probably correct to give us a bullish dummy, but it will be an opportunity for us to sell. So let me bring out the drawing now. So everything is really messy now. I have to take this out. Forget what the RSI is giving you now. I think the correction here is done to the upside. We are going bearish again. So what we can expect here, we can expect price to come up to this area. And in the middle of this space, this is where we can find our resistance, probably to sell. We're going to look at 1 hour of the lower time frame to sell. And if we're going to sell, we're going to break all this to the downside. All these ones will not hold anything again. All these things will not. Price is going to break this. Price is going to break this to the downside. it won't hold anything again. So we are come to the downside. In our come to the downside, so we are looking at the area that may first want to push the price, because this has no effect on the price again. So here now, this is going to run to the downside. We'll be looking at, let me see, the area. So around this area is where they may be looking for a reaction. This zone here. This zone here. Those two zones here. Those two red zones. Well, let me use this color for it. Those zones, that's where we should be looking for reaction if we are going to go back up. Otherwise, we are coming to take the low. And once we take the low, then we'll look for any other place. So for now, stop loss around this area, look for sell, and this sell may go all the way to hit this place. Then a correction around this area, we're going to break down. A correction around this area, this will not stop the price. This is not going to stop the price. If the price didn't get stalled around this area, I think where the price may come to, it's even this area now. The price will come all the way. This one will not even hold the price. I don't see them holding the price really. I don't see this holding the price. So any opportunity you get is to continue to shift your stop loss. So this is the first area. If this one does not hold the price, this one cannot hold the price, then we are going to come low and finish up the Y leg. And that Y leg is huge. For this is very huge. Probably I'm going to correct that later. It's very huge. So the Y leg is going to be huge. It's going to fall, and this is the W here. So it's a big gap. It's a big gap. But otherwise, if it's going to give us a flat structure, like we said for the other one, so we might just be getting a reaction around this area to give us that flat structure that we saw. So we're going to be looking at DXY as well. So for now, it's going to be a sell down to this area first. Any reactions we'll see probably down to this area, but it's going to be a long sell. It could be a long sell. I have too much drawing here. Because it's now from here, a W. Now, another thing that we see here also, from the reaction here, price is not coming here. This is a very, very sharp move. If I use blue for this, So that's the area. So let me quickly look at this. Okay, so the support is on point. That support is on point for a W. That support is on point. So where retracement that we add to the upside from that W to the upside, still the same. This also had broken 90. So it looks like we may not be seeing this. So our best bet is to look at a structure like this. That this will form like a flat, with this maybe coming around to this area, or thereabout without breaking this. If this is not taken, the price may come here to finish up this as a flat here. The price may come around this area to do this like an A, B, and a C. So if we have that, we're going to look at that possibility, an A, B, and a C, then the price will continue the ferocious with 3. But if the price should break this, then we are coming to this. That is huge. That is huge. So we have to be ready for anything. So the decider, it's between this point 1 and 2. 1 and 2. What kind of reaction are we going to get here? What reaction would you get here? So a break out of here, this will not hold the price. The price will be coming down to this area. But for now, look for sell. I won't be buying this until I see a reaction, a sharp reaction. So likewise, Nzdusd USD. Nzdusd USD also, for now, we're going to look for a sell. That one properly has not even told us that it's ready to go up anyway. So we may be seeing this. This will be the stop loss for now. This high here, this we should allow it to correct. Then we should be looking at the base here. What reactions are we going to get at the base here if we're going to go up? So the US election might just push this, maybe form a triple bottom, around this area before price begins to go up, and that kind of reaction. So something tells me we might not do a Y leg as we are expecting based on what this had done so far. If we had wanted to do a Y leg, probably it would have given us a deep correction of a B, to now have a proper C. But from the way it's looking, I think it might just end in a flat and just begin to give us a bullish structure of the third wave to the upside. So we have to be very careful. So selling also is dangerous. That's what I'm trying to say. So if you're going to look for dollar weakness, we're going to look for dollar weakness in a brief, and we are going to be careful because immediately after the election, maybe a week later or thereabout, weakness may just come to the dollar, as opposed to what we are thinking that dollar will begin to fall after December. That may be happening within November. So we have to be careful. So now that is my own line of action. Now, if I'm going to now look at USD JPY. Now, USD JPY also is one thing that may give us another clue to what DXY also is going to do. We are in the structure, because now I see this is going to break the top, even though RSI is showing that this is getting weak. This is getting weak. Okay, we can see that cross here on RSI, daily RSI. But now with the US dollar, US election in view, I see that this is going to break, and it might just be the last break to the upside. Now, we must now begin to navigate. For anyone probably putting a sell limit around this area, I think it's better for us to take our sell limit out of the way. Don't allow it to trigger. Let this correct for us to take a buy. So if we are taking a buy, we are trailing the stop loss. Anything that we do in this moment after the election, we are trailing the stop loss because we are trading in the line of dollar strength. But we must do it cautiously, trailing with stop loss, because dollar may just grow weak on us when you least expect. But at the same time, you don't want to begin to look for dollar weakness now. What you're going to see before election is what looks like weakness, then they will reverse it with some strength, which may not last. So based on USD/JPY stock structure, for this structure, then because we don't expect that this is a complete structure of correction from the yen, these look like leg C. So what do I expect here? What I expect here, let me bring out the drawing. What I expect here is that these may have finished the B here. This is an A leg, this is a B leg. So we expect at least 1618 push to the upside. And a 1618 at least to the upside from here. At least is around this area. So this is the area that will be looking for price to take a bow. This area here, it's very important for me to look for price to take a bow here at about 155 area. Price should not break that. Price should not break that. A breach and a break out of that is trouble for yen. So, but I would rather prefer us to allow this to continue to go and go. Yeah, so this also, the structure here that I'm seeing, which may favor yen and weaken the dollar, now tells me that if that happens and the yen is able to bounce back, then we might see that the contracted flat structure that I talked about may just be what will play out, and not that we're going to see a Y leg, because this is too shallow here, and dollar may just fall against the yen. So we're going to look at DXY and yen to now navigate Nzdusd USD, Euro USD. So we are not going to do more than that. So looking at the structure clearly, carefully now here, because from where the structure is to where we may have a turning, and we're not going to, of course, sell blindly. That is how many pips from here? That's about 250 or thereabout pips, which is huge. So what we can do, I know that we are holding a sell. We're going to look for a buy to erase the effect of that. We're going to look for a buy. I will be calling the buy once I see the correction, and we'll be guiding that buy with a stop loss. And once we have a proper descent, then we'll add more to the sell carefully. When we add to that sell, we place a narrow and stingy stop loss, because we don't expect it to break above here. Yes, we don't expect it to break above here. We will not expect it to break above this area. Now, in the immediate, where do we look for this buy? Can the daily time frame help us out? No, not at all. So except we turn to the lower time frame. So I'll be turning to the lower time frame and give us what we should expect from here. I think this is about completing a 1, 2, 3, 4, 5 move, and for us to have a proper ABC. If you're going to sell this, you're going to sell this with care. Yes, on the so it looks like we are about doing a fifth wave here, then to have a deep ABC of a 2 before the election, and probably three wave, the third wave is going to rally to the upside. So that is what I can see here. If I go to the 15 minutes time frame, yeah, 15 minutes time frame, yeah, that's what I can see from here. Yeah, we may have seen a 1, a 2, and inside of a 3, and this is the fourth wave, probably of a 3, and one more leg to the upside to finish with 5 in this mode. That's what I'm saying now. With 5 in this mode, if that is the case, with 5 in this mode, let me go to 30 minutes. With 5 in this mode, so should not go beyond 1618. Then if that's the case, 1618 up here. If you want to look for a sell, you can do for a short sell from this top here. This is the area, maybe around this area, you begin to look for your sell around this area. You look for your sell around this area, your stop loss maybe should not break this area. So you can get a self setup that will just come here to give us a deep correction of a wave 2. If that is the case, if that happens, we will need to break here. So once we break here, that is when you now begin to say, okay, yes, we are going to have a deep correction. So you have to take this to the downside first before you begin to. So this may just go up, hit this area without breaking this area, then the price will come to the downside, break this area, then immediately you break this area, begin to look for your buy setup to the upside. That is what we can do here. Then the last one is gold. The last one is gold. Let me go to the daily time frame here on gold. That is what I can see. This is going to take the top now. So on gold for me, with the US election, I think gold is going to fall more. We're already seeing this, to the downside. This is looking like the fourth wave correction had begun. So what do we mean? Now, two things here now. We are looking at this as the base of that 2. And so that will be a smaller correction of a wave 2 or wave 4. If you're going to get that, again, we are looking at maybe a bigger 4 here. Now, let me try to zoom again. Now, if you look at this structure here, we had this completion of a move here, which is an ABC. An ABC here gives us this to be a 1 and a 2 around this level. So we can see a 2, a 1 and a 2 around this level. And then we have another 1 and a 2 here. So are we correcting this as a 4 or are we correcting this as a 4? That is what. So this is a 4. Let me bring out my drawing so that you see what I'm trying to say. Like here is in a blue, in a green, are we correcting 4 in a green or are we correcting 4 in this blue? So whatever it is that we are correcting, so we'll tell once we begin to break. So now where is that reaction occurring? Let me quickly draw something out before I zoom back. Okay, so it's here. So we are correcting from this top. So we believe we are finished with 3 completely. Good. So we believe we are finished with 3 completely because this one had finished 1, 2, 3, 4, and a 5 in the turquoise blue to finish wave 3. This is the wave 5 of wave 3, which is completed. Wave 5 of wave 3 in the blue. So we want to do this. Either we want to do this 4 or we want to do this 4 of a green. That is what we are contemplating now. So if it's going to be of the blue, let me just take this out so that it won't confuse us. This also, so once we break this one, this area, Once we break this area red, then we know that we are in this correction or in this correction. So if we are correcting the blue, that is what to expect, at least the blue now. If we are correcting the blue, because now we are correcting, so the 38 is around this area, so which is where I put this, and that is about 1,500 pips fall. That we are, no, it's more than that. It's about 3,000 pips fall. And if we are correcting the green, which is very big, which I will not be too anxious that that is all optimistic, then it's coming here, around that area. So in between that, we know if it's green or blue that we are correcting. So the gap in between is not something that is small, because you may think it's small. That's about 730, 20 pips to the upside, and back here gives about 3,800 or 3,750, yeah, pips. So is it that we're looking at 3,000 or 3,750 pips? So to correct, before we go up and take this top again. Now, let's now go back in there to see what is possible on the 4-hour time frame. The daily time frame, what is it telling us? We are correcting. The daily time frame, we are correcting. Daily time frame, we are correcting. So the RSI has confirmed that, so we can see that we are correcting. And of course, in line of US dollar strength and the election, so this should fall more. We may have seen a reaction of a 2 here. I think we're still going to get a pullback or not once we go inside there. On the 4-hour time frame, if I give you a sell, now for now, this is where our stop loss is going to be, you know, if you're going to sell this. So we don't expect this to take 27.62,500. So we don't expect that to happen. So this is a sharp move, and this is maybe an A wave, a B wave. We may see a C wave. We need to take this to the low, to break it low and see if you're going to get an A wave. Now, the tricky part of it is here. Now, see the point we are getting these here. The blue is not in view at all. The blue is still down here, and we are getting these. Now, what may happen here, we need to take this out first. We need to take this out first. Once we take this out, like I said, this is 4, this is 3 in blue, 4 in blue, and this is, sorry, turquoise blue. This is 5 in turquoise blue. And this is, I believe, this is 3 that we have finished. And I believe that this 5 is still coming up there. It's still coming. So this 5 is still coming, I believe. So now we may have a WXY at the end of the day. So let's see the way this one is going to come. It may just come here and give us an ABC to give us, you know, it's probably a W, and this may go up. Of course, when we see an opportunity to buy, we should buy as if we are going to break the top. That's my advice. We should buy as if we are going to break the top, because the X may go deep, and if it's go deep and continue to go, it shouldn't break this. Once you take this out, we are going up again. So if you get a W, then we should look for a potential X that may turn into a 5 or not. And if that happens to go down again, that may now come down deep. So let's see this out first. Let's see this out first. We have to see this out first, breaking this area. We need to take this area low. break this low, probably get a reaction to correct another leg to the downside. So that is how to proceed here. But in the immediate on a 1 hour time frame, or let's say 15 minutes time frame, in the immediate, but I see this as an ABC now, because we might have thought that this is wave 4 to give us a wave 5, but this is more than wave 4 for me, because it actually breached 50% retracement. So this is 50% retracement has been breached. It didn't even out here, breach this area. I think it's done. So this is like, for me, an A, except if it takes that top again. And for me, this is a B wave. We need to break this area before I think is part of wave 4. I doubt it. And you know, the impulsive nature of this also tells me that this is like a wave 1 of the new move, very sharp to the downside. Now I need to now see that this is an A, B, and a C wave that will take this to come here. That is possible. We need to see, we first have to break this area to the upside of 2738. So once we take that, we are looking at the potential with C to the upside. The way it is had occurred here, a sharp movement, an ABC, a very sharp movement, and that these, so the downside at turn at 1618, we may be seeing an extended flat here, but I need to see how this is going to correct. So if indeed this is going to be a wave C of the extended flat that will come here, then it's going to be impulsive to the upside. So we need to see the impulse nature, but once it's impulsive, then I'll be looking to sell from this area, not even here. After we break here, I'll be looking to sell from here and to come to the downside. I think with that, I've come to the end of today's update. Happy trading. It's a long one.